Hello, and welcome to tonight's session. Tonight we'll be talking about vehicle finance. Those who are here for the first time, we are welcome as well. And if you are coming back again for the fourth or third time, thank you so much for tuning in. And I'll make sure that today it's worthwhile. Before I dive in, I'd like to welcome those who have just joined. I see there's Innocentia. I see Given Sab is also watching, and Matobana, thank you for watching. And Harrison, I can see you are here. Thank you guys for joining in. So yeah, if you are one of those people who want to buy a vehicle, or maybe you've bought a vehicle and you don't know anything about the contract that you've signed, so and you don't want to make the same mistake when you buy a vehicle again, this session is for you. And if you have any questions, as usual, leave your questions on the comments below. And then if you are watching a replay as well, make sure that you leave your questions on the comments, and I'll read them as well. Yeah, I see today a lot of people are here. Thank you, Tony Mate, for joining. Sposiso Lulu, I see you just joined in. Thank you. Without any waste of time, let's jump right into it. All right. A lot of you obviously want to know what is vehicle finance. Okay, let's start with that. Let's start by explaining what is vehicle finance. Vehicle finance is a specialized loan. In bracket, remember that it's a loan that you get from either a bank, dealership, or vehicle finance company, and then that allows you to pay off a new or pre-owned. Pre-owned means a used vehicle in monthly installments over a certain period of time. So you go to the bank. Let's say you want to purchase a vehicle. You go to the bank or a dealership or a finance company, and then you'll sign a contract to pay over that for that vehicle, maybe for a period of 5 years in monthly installments, which is in 60 months you'll pay a certain installment. Then from then you'll own a vehicle. That's what the vehicle finance is. And then what other option, if you don't want to go through the vehicle finance, the other option is that you have is to take out a lease. A lease means a rental. So in that case, you are renting a vehicle. So you don't want to own a vehicle. So you can also take that option as well as another method of finance. So when you lease a vehicle, you have a right to use it for an agreed number of months and kilometers. At the end of the lease, you may return the vehicle, pay any end of lease fees and charges, and walk away. So what happens with the lease is that you sign, maybe for example, you sign a contract. It's usually a short term, maybe like 12, 36, or 48 months. You sign a contract for 48 months, and then in your agreement, they will tell you maybe in a year you don't have to exceed 20,000 kilometers in your travel. So then what happens is, if you exceed those kilometers that you've agreed, they will charge you per kilometer. They will charge you penalties. So at the end of the contract, then you will have to pay whatever kilometers that you've exceeded. So that's what the lease is. So they basically, what happens is, you go to a dealership or a finance company. They will give you a vehicle. So you'll be renting the vehicle in a sense. So then you will pay whatever rental amount. But you have restrictions. For example, they would say you can only travel 20,000 kilometers a year. So should you exceed anything above that, then you will be penalized on that. So they will charge you a certain kilometer. I mean, a rate at a certain rate at a kilometer. Yeah, that's what will happen. So, two confusing things: balloon payment versus the residual value. So there's difference between those two things. Okay. So also, when you buy or you lease a vehicle, it is possible to structure your vehicle financing with a balloon or residual payment. This results in lower monthly payments, making the agreement appear more affordable. However, you end up paying more over the long run, as the residual or the balloon payments need to be paid at the end of the contract. So yeah, it may seem like you are paying less when you take out the balloon payment, but at the end of the contract, you still have to pay that amount, and you might pay more because of the interest that you pay at a later stage. So the difference between a residual and a balloon payment contract relates to where the risk of the outstanding payment lies at the end of finance agreement. So yeah, the difference between the two, it's the risk. So one, for example, the residual value, the risk lies with the owner of the asset, and then the balloon payment lies with you, the buyer. That's where that's one of the main differences. A balloon payment is an inflated installment that falls due at the end of the agreement. So remember, the balloon payment will be paid on your last installment. If you've taken a contract for say for 60 months, you will pay the balloon payment at month 60 with the last installment. So the risk associated with the balloon payment is carried by the customer. As I've said, you are liable for the full balloon payment in the final month of the contract, and this forms part of the payment stream. Okay, before I go to residual value, I want to show you the effects of the balloon payment. Let's look at the calculator, the home loan calculator here. Say, for example, you are buying a vehicle of, let's say, 200,000, the purchase price, and then maybe you're not paying a deposit, and then let's work on the safe normal term, which is 60 months, and then the interest rate, let's say they are financing you at 11%. No, here there's no balloon payment, right? Look at your installment. Your installment will be 4,323, right? And then the total paid over the loan period, you will pay 265,500 to 265,504. Let me record that because I want us to compare at the end. 265,504. Let's do this. Let me create a new spreadsheet. So I'll try and make this bigger. Okay, this one has no balloon payment, and this option will have a balloon payment. So I've said here the amount that you are paying if you are taking out the balloon payment is 265,504. All right, 265,504. Remember, this includes your interest. Let's do this. Okay, and then what happens if you taking out the balloon? So already here you see you bought the car for 200,000, but you are paying 265,504. So you are paying interest of 65,504 over the period of 5 years. If you are not taking a balloon, and remember we said you are paying it over 5 years, which is 60 months, and then the interest rate that the bank has given you, it's 11%. So let's say you're taking out the balloon payment of say 30%. 30% of that will be okay, let's do this first. All right, balloon payment, let me change this to 30%. If you take 30%, you see here your installment is now reduced to 3,594, but in total you are now paying 279,740 with the balloon payment. 279,740, 279,740. So if you are taking a balloon payment, you are paying 14,236 rands more than if you are not taking a balloon payment. So you see, when you take a balloon payment, it may seem that you are paying less because of the installment will be lower, but at the end of the contract you will pay more because of the balloon payment. Okay, so residual value is associated with rental agreement. So okay, with the balloon payment is for example, you agree with with a dealership or a finance company that you will pay it on your last installment. Let's say your contract is 60 months, like I said, you will pay that let's say on that 200,000, the balloon payment was 30%. So you will pay the 60,000 as your last installment. So yeah, that's what the balloon payment is. So in other words, when they're calculating your monthly installment, they are putting that 60,000 aside. So they work out your installment on the 140,000. Then the other one, and the other one you'll be paid on your last installment. That's how the balloon payment works. But with the residual value, it's almost the same, but it's a bit different in terms of who carries the risk in there. Remember, with the balloon payment, you carry out the risk, so you need to make sure that the value of your car, at least it's more or less the same as the amount of the balloon payment on your last installment. So whereas the residual value, the owner will make sure to protect the value. So the risk will lie with the owner in this case. I mean, with the owner, not you, whoever's renting the vehicle. So residual value of an asset is an estimated amount that an asset owner would earn by selling the asset at the end of the contract. So the owner here puts an estimate on a value. Say you're buying the vehicle of maybe for 200,000, then maybe he will say at the end of 4 years, for example, on the residual value, it's 60,000. So in other words, he estimates that at the end of 4 years, he can sell the vehicle for 60,000. So that's why he needs to protect the residual value during the contract by putting limits on you that you do not travel, for example, more than 20 kilometers. That's for him to protect the residual value of the asset. So the risk associated with the residual value payment is carried by the financial institution, as I've said. Financial institution typically would therefore place certain restrictions on the mileage of the vehicle and may impose penalties on high mileage users. Like I said, if you exceed maybe those 20,000 kilometers that they've allocated you by maybe 4,000, they will charge you maybe 5 Rand per kilometer that you've exceeded as a penalty in order to recover the residual value. That's how it works with the residual value. Whereas the balloon payment, you need to make sure that you raise that money and pay it as your last installment. So what is the risk? One of the risks is the possibility that the balloon or residual payment can be higher than the market value of the vehicle at the end of the contract period. Say, for example, after 5 years, when you've taken your balloon payment of 60,000, maybe the value of the car at that time, by the time you finish, will be 20,000 or 30,000. You see, now you have lost because you are paying. Your balloon payment is now higher than the value of the car. That's one of the risks that you are faced with, that the market value is actually less than your balloon payment. So the difference between a residual and balloon payment contract relates to where the risk of the outstanding payment lies at the end of the finance agreement period. We've mentioned that for example, the residual value, the risk is with the owner of the asset, and then with the balloon payment, the risk is with you, the buyer. So what is the difference between fixed rate and variable rate? So when you take out finance on a vehicle, you can either be on a fixed rate or a variable rate. A fixed rate has the same interest rate for the entirety of the borrowing period. For example, if you're taking an asset for finance for 5 years, and then they're giving you 11% fixed rate, it means your interest will stay the same for the whole 60 months. It will not be affected by any changes in the prime rate. Whereas the variable rate loans have an interest rate that changes over time. If, for example, they've given you 11%, maybe let's say they said prime plus 4%, for example, the current prime is 7.25. Let's say prime plus 3%. Then your rate will be 10.25. And then if maybe 4 months down the line or 3 years down the line, there's a change in the prime rate, whether it goes up or down, your installment also will be affected. It will either go up or down depending on the announcement. That's what the variable rate is. Yeah. So, but the fixed rate stays the same for the entire contract. It doesn't change at all. And yeah, when they say, for example, they're increasing the prime rate by 100 basis point, it means your interest rate will increase as well by 1%. If they say they decrease it by 100 basis point, it means it will decrease by 1% as well. That's what it means when you have a variable rate. But if you have a fixed rate, whether it increases or decreases, it stays the same. So ways of financing. So you can either finance through a financial institution, or you can finance through a dealership. When you finance through a financial institution is when you do the application yourself. Maybe you go to your bank and apply for finance yourself, or you can get the complete the application form, or go to your dealership. Those are two ways of doing it. So the main difference between financing a vehicle through a bank or a dealership is that salesperson at the dealership typically does all the work for you. That's the difference. Whereas when you apply through your bank, you do it yourself. But when you go to a dealership, the salesperson will do the work for you. So financing a bank through a bank generally requires you to obtain a pre-approval for the loan, where the bank provides you with a quote and a letter of commitment that you take to the dealership. So when you apply for yourself, you apply, for example, online, then you get a pre-approval. Pre-approval, it means you get an approval before you go and purchase the vehicle. It doesn't matter let's say maybe that time you don't know what vehicle you want, but then the bank will give you a pre-approval of the amount you qualify for. If, for example, they say you qualify for 150,000 rand, so you can go with that pre-approval to a dealership and buy a vehicle within that price. That's when you do a financing through a bank, when you do it yourself. And then financing through a bank or financial institution may offer you comparison and credit terms in advance. So when you do it yourself, you have an option, you have a chance to compare. Maybe you can apply from different banks online, and whichever bank gives you the best rates, then you can use that one. So you have an option, a chance to compare your terms that they're giving you when you do it yourself. So the vehicle finance interest rate offered by the bank is known as a true interest rate, as it does not include a markup. So that's another advantage of doing it yourself, because whatever the rate bank gives you is a true interest rate. So unlike when you go to a dealership, they will add their own interest rate like as a markup, so that they can make a profit when you buy the vehicle. But when you do it yourself, then there's no markup, so you get a true interest rate in that essence. So financing a vehicle through a dealership, once you have selected the vehicle you'd like to buy, the dealer fills in an application form that it forwards to the selected list of approved auto lenders. So at the dealership, they will give you a form to complete, and then let's see. Okay, so on the form, when you fill in the form, these are the documents that they will require. For example, if you are a private individual, they will need a copy of your ID, your valid vehicle license, your latest salary advice, which is your payslip, and your 3 months bank statement, your proof of residential address, which is not older than 3 months. Those are the requirements, the required documents needed when you apply at the dealership. But if you are buying it through a company, or if you are self-employed, they will need those above. Plus, they will also need ID copies of all directors. If your company has more than one director, you need to provide all the ID copies and a valid license of a director, and 3 months company bank statement. And then they also need the audited financial statements of the company, usually for the past 2 years. And then they will need your company documents as well. They will need the proof of address of the company, and then they will need the proof of address also of the owners of the company. And then also a resolution from the company. A resolution means they give you authority to go and buy the vehicle and sign the company. They sign the contract on behalf of the company. So they will need all of those. So but if you are just employed, full-time employed, just those above. It's just a copy of ID, your vehicle license, your latest salary advice or your payslip, and your 3 months bank statement. Lastly, your proof of residential address. So those are the documents required. But if you are self-employed and or if you have a company, they require these plus the ones below. So they require a lot of information if you are self-employed, because there's no it's not easy for them to confirm your earnings. All right. So finance. Okay, the dealer typically negotiates the best vehicle finance interest rate for you, and takes the difference as compensation for handling the finance application. See, as I've said, when you do it yourself, there's no markup. But when the dealer does it for you, he can try and negotiate the best interest rate for you. But also they will add some markup on the interest so that they can charge that as a compensation of handling the finance application for you. So that those are the difference. So if you are not lazy, just do it yourself and save yourself some money here. Dealership financing may offer you the following advantages: convenience, and then multiple financing options. Remember, the dealership will use the very same form that you filled in and send it to different banks, so you'll have multiple options, financing options available. And then sometimes they do have special in-house deals. If, for example, if you would buy a vehicle at a certain dealership, they will tell you that you will get this maybe prime minus 5%, but only if you apply using their own finance in-house. So that's another advantage that you can get when you do with dealership financing. So which is best? Do you have to do it yourself through the bank, or do you go to a vehicle dealership? Ultimately, the best vehicle finance option is the one that will cost less over the finance term. Vehicle finance interest rates offered by banks are lower than those offered by dealership because they don't include a markup. Yeah, so those are the two differences. But remember, the rate that you get also is also depends on your credit profile. So if you've got a bad credit record, you'll get higher rate, and then if you've got a good credit record, you'll obviously get good rates, interest rates. So it's also affected by your credit profile. There's no standard norms as to what rates should be used or not. Yeah, so it depends on your credit profile. So what is important when you purchase a vehicle, when you're at the dealership or when you do it yourself, is the type of agreement. You need to identify whether you're taking out installment sale agreement, which is your normal finance vehicle finance, or you're taking out a lease. So you need to understand the difference between the two, and then you need to get the purchase price, and then also need to determine whether is there a deposit required. But if you have a deposit, I would advise you to put down the deposit because it will save you some interest. And then also the term of the contract. Remember, the lower the term, the longer the term, the longer the more interest you pay. But remember, if it's a long term, the installment will be less, but you will pay more interest. But if you take it on a short term, the interest will be higher. The installment will be higher, but the interest that you're paying over the contract will be less. So you'll actually pay less if you take it on a shorter term than if you were to take it over the longer term. And then the interest rate, you also need to check that on your contract, whether it's a good interest rate or not, by comparing maybe to the current prime rate. And remember, you can always the bank also gives you an option to negotiate for your rate. So you can negotiate your rate if you feel that your rate is higher. You still have that opportunity to negotiate for a better rate with your bank. And then your interest rate option, which is you need to know whether it's a fixed rate or a variable rate. And then also the balloon payment, whether you're taking out a balloon payment or not. So those are the important these are the important information that you need to look at your contract. So just want to show you something. Okay, no, it's fine. I'll come back to it later. Let's do this first. Okay, before visiting a dealership, what are the things that you need to consider? First of all, you need to identify your transport need. Ask yourself whether do you really need to buy a car? Do you really need to have your own car as a mode of transport, or can you use the public transport? So you need to identify your transport needs. Don't buy a car because your friend has bought a car, or don't buy a car because you've got a salary increase. So you need to identify your transport needs. It's all about the needs first before you decide on to whether you buy a car or not. And then figure out your financial situation and budget. Like as I've said on the previous session, that the budget is very, very important. So you need to figure out your financial position. Take all your income that you have, less all your expenses that you are paying every month, and then see what is left there and see whether you can afford to buy a vehicle or not. So, and then the next thing is to obtain and read a copy of a credit report. So yeah, before you buy a vehicle, remember to get your credit report. Sometimes you may find that there are errors in there. Maybe they're saying you have not paid an account or so and so. So this, by doing this, it gives you an opportunity to correct whatever errors that you may find on your credit report, so that when you apply, you don't get your application don't get declined. So you've already corrected that prior to submitting your application. And then also check your motor buying guides, newspaper ads, and other publication and website to find out the price and other information of your vehicle that you are interested in. So yeah, before you buy a vehicle, do some research on the vehicle that you are buying. For example, one of the things that people tend to overlook is the fuel economy, the fuel consumption of the car. You need to check that, and then calculate whether that will be reasonable for you. Let me show you an example of how to. Okay, I've created a calculator that you can use. I'll leave it on the links after the session. Okay, let me show you. All right. Yeah, let's say you want to buy a Polo. Let's look at the Polo, for example. See, one of the important things that you need to look at on the fuel economy is your fuel consumption. Like here, they're saying the fuel consumption. Let's look. Let's look at TSI, DSG. They're saying it gives you combined fuel consumption is 4.7 liters per 100. What that means is for every 100 kilometers, you need 4.7 liters to travel. To do 100 kilometers, you need 4.7 kilometers. So let me give you an example. The first thing that you need to do, let's say maybe you work from Pretoria to Joburg. Let's go here. Just want to calculate the distance. Okay, this is from Google Maps, Pretoria to Johannesburg. So, okay, if you are using the N1 without traffic, it's going to take you 48 minutes, which is 68.8 kilometers. Okay, let's use the worst case scenario. It says here it's 75.1 kilometers. Okay. So if you're working from Pretoria to Joburg, so every day you will travel 75 kilometers, just one trip. So let's go back to that calculator of mine. So the kilometers, I said it's 75 per trip. So 75 times 2 is 150, which means per day you're going to travel 150 kilometers. So like I said, it's the fuel consumption is a consumption for every liter. It's the liters per 100. So you need to take 150 divided by 100 to get one. Then you get 1.5. Then from there, you multiply by the fuel consumption. Let's look at the consumption again. It says for the Polo, it says you need it gives you 4.7 liters per 100 kilometers. So if you go back to that calculator, So it's 4.7. So yeah, it gives you 4.7 liters for every 100 kilometers. So in this case, it's 1.5. So it's going to be 1.5 multiplied by 4.7. It's 7.5. And then now you have to determine what is the price of petrol or diesel in the air. Okay. So the price of petrol currently is for 93. Let's say you're using petrol unleaded 95. It's 13 rands 20. So it's 13 rand 20. So which means per day, okay, one trip for example, it means per day you need 93 rand. It's gonna cost you 93 rand 6 cents of petrol to go to work per day. And then you in a month you go 20 times a day. 20 times is 20 days. So which means for the whole month you need to budget 1,800. Okay, almost to, let me say for example, let's round it off to, you need to budget 2,000 for fuel to go to work every day. So you need to assess your situation and check how much you're spending on a public transport. Check whether you're spending less or more, and also look at also consider the convenience, because remember, time is money as well. So you need to check whether if you are using a taxi, how long does it take you to get to work, and then if you'll use your car, how long it will take your car to, yeah. But in simple terms, if they are saying the Polo gives you 4.7 liters per 100, it means for every 100 kilometers you need 4.7 liters, and then a price per liter is 13 rand 20 cents. That's what it means. I'm not sure if I'm making sense. So let's recap again. So on this calculator that I'm going to leave for you, you'll only put in the amounts on the yellow fields only. For example, we've worked out that to go to work from, if you are working from Pretoria to Sandton, it's 75 kilometers. So you'll do 75 times 2, which is 150 kilometers. And then the fuel consumption of the vehicle, you put it in there. And then from there, you put in the price per liter of the petrol or diesel. So those are the only amounts that you put in. And then the number of trips that you're going to do in a month or in a day. So it's 20 trips for the whole month. Then it will work out for you the cost. So I know there are vehicles that gives you like 7 liters per 100. If you put that, you see you'll be your petrol is going to cost you 2,772. So that's why it's important to look at the fuel consumption, so that you know whether that vehicle that you are buying is going to save you money or is going to cost you more money. So some vehicles go to 9 liters per 100. So it costs you 3,564 per month on fuel. So it's very important to check that. All right, let's move on. Okay, like I said, you need to check the publications and the brochures of the vehicle that you're buying, so that you can be able to make good decisions before you go and visit the dealership. So that when you get there, then you already have made up your mind as to whether which car you're buying. Otherwise, you'll end up buying the wrong vehicle. Okay, and then also find out the cost of insurance from your insurer in advance, so that you can factor that in that amount. So don't ask for insurance code after the approval. Get the insurance code before the approval, because the insurance can give you the amount, so that you know whether whatever you want to pay or whatever the bank has approved you, plus your insurance, can you still afford to pay for the vehicle? You also need to take that into account. And then after you've done that, revisit your budget to check if you can still afford to buy. It's very important to go back every now and then to your budget and update with whatever information amounts that may affect your budget. And then know the difference between buying and leasing a vehicle. Sometimes you think you'll own the vehicle at the end of the term, only to find out actually you are renting the vehicle. So you need to know the difference between the two. because in most of the time the leasing, the installment is very low because there's no transfer of ownership, but there'll be restrictions on kilometers, like I said. And then when you get to at the dealership, stay within your price range. You see, this is one of the examples where you have to decide using your head instead of following your heart. Because if you follow your heart, you'll end up buying a car that you cannot afford. So if you've already made up a decision, stay within your price range. Stick into using your head. Don't use your heart, because your heart will guide you into making a wrong decision. Try to negotiate both your purchase price and your finance term. You are at the dealership, you can ask for discounts. You see, because whether you're financing a vehicle, at the end of the day, you are still paying for the purchase price. So it's very important to try to negotiate for the price as much as possible. So don't say that the money is not going to come from you, it's going to come from the bank. But at the end of the day, you are the one paying, and you are paying interest. So if the price is higher, then you'll pay more interest. But if you can negotiate the price, maybe even if it's 5% discount, it makes a huge difference on your installment, and also on the cost of your finance. Determine whether an offer meets your budget and transport needs. Whatever offer they give you, again, go back to your budget and check if that offer meets your budget. If it doesn't, try and negotiate again, and so that until it meets your budget. Understand the value and cost of any optional products or service offered to you, such as an extended service contract. If they are offering you other options like warranty, obviously it will come with your warranty. And then maybe they may offer you extended warranty. Or service plan. So you need to check whether you really need those optional products before you sign a contract, because you'll also pay for those as well. Remember, you'll also pay interest as well. So it's very important that whatever they put extra, do you really need it? Don't put a sunroof if you're not gonna open your sunroof in your vehicle, because at the end of the day you'll be paying for it, and you'll also be paying interest. So whatever extras they offer you, just ask yourself whether do you need them or not. You find that a lot of extras that they give you and that you take, you don't even know how to use them. So it's pointless accepting any extras because you want your car to have all the extras available. So just check whether you need them or not before you sign a contract. Read the entire contract carefully and ask questions about the terms of the contract before you sign. If possible, get your contract before you go to the dealership for delivery, because that will give you time to read through it carefully, and then maybe research on other things that you don't understand on the contract, unlike when you sign the contract when you are there to collect, because you are rushing and you might miss a few things, and you might sign for things that you're not aware of. So it's very important that, if possible, get the contract mailed to you maybe a day before or 2 days before you collect, and read through it and understand your terms, and then change whatever that needs to be changed. And then after signing a contract, be sure you have a copy of the contract, of the credit contract or lease agreement, with all the signatures and terms filled in before you leave the dealership. So you need to make sure you have a copy before you leave. Don't let them send it to you after you've left, because it might get lost somewhere and you might not have a copy of your contract. So make sure you have a copy of contract before you leave. It's very, very important. And then after signing, know that if you have financed the vehicle, ownership belongs to the bank until you have paid the contract in full. Yeah, remember, if you are signing a contract, it's not your vehicle yet until you have paid your last installment. That's when it becomes your vehicle. So that's one of the things that you need to remember. And then make your payments on time, because if you pay late, it affects your credit profile, and they might end up repossessing your car. So if you're having payment issues, it's better to phone your bank and make arrangement. In that case, you avoid issues such as repossession of the car. Yeah. Let's see the comments here, because I think Okay, let me see the comments. Sorry. Donki Efofang saying renting a car is now a new concept. When you travel, you have this option available. Companies like Avis provide that service. Yes, they do. But then if you buy if you rent from Avis, for example, it's not the same as you would rent it from the bank. Because remember, Avis, unless you are taking maybe a long term, like 48 months, you would get the same terms. Because the daily rate will actually be more than almost than what you would pay on a monthly basis. But if you are taking it maybe with them, maybe on a 4 year contract, then it's the same thing. Uh, let's see. He's asking. I wanted to understand the financial model you are using is the same as Avis or different. Yeah, I that you need to. That's why it's important to know what type of contract they're giving you, whether it's a short-term lease or long-term lease. And then remember, some leases have residual values. So, like I said, they will give you kilometers restriction that maybe you may not travel 20,000 kilometers in a year. So it's very important to know the type of contract that you are signing. Uh, let's see your comments. Uh, you apply it through the bank. You have to provide your contact, cash flow projections. Yes, if you are self-employed or you are buying it from the business, they will need these requirements. Yeah. What is the suitable rate in general? Uh, you have to, for example, you have to check your prime. Like I said, the prime rate it's 7.25. If they're giving you 9%, 10%, it's still a good rate. Remember, at the end of the day, is the cost, total cost of finance. If it makes sense to you, then compared to the other rate, so it's always the bottom line is you at the end of the day you compare the cheaper finance. Which one gives you? Remember, for example, they might give you a higher rate, but maybe when you pay it over the short term, you will pay lesser than what you would pay over a long term. So that's why you have to look at the cost of finance in total and see which one works out cheaper between the two. Uh, so what happens if I can't pay my balloon payment? See, when you have a balloon payment, you have three options. At the end of the contract, the first option that you have is you're going to pay for that amount, whether it's 60,000 or not. Option number two, if you cannot pay it, you can refinance your balloon payment. In other words, you are taking another loan to pay that loan. So you will refinance maybe over the period. They will give you options between, it's going to be 12, 24, 36, and 48 months. So you will pay another interest as well. So you see the cost of financing then will be more, because if you are refinancing, they will charge you another interest for another term as well. So that's option number two. Option number three is that you will trade in the vehicle that you have so that you can pay off whatever outstanding. Those are the three options you have if you have a balloon payment. Like I said, number one, you pay the amount that is due. Number two, you refinance the balloon payment. Number three, you trade in the vehicle that you have so that you can pay off your debt. Those are the three options that you have if you can pay if you have a balloon payment. see. Banks use two criteria to approve your loan request: affordability, credit risk. If you afford the loan, but you have a bad risk, your loan will be declined, and vice versa. Yes, but with their in-house finance, their target are those people who do not like who have a bad credit record. That's why they will give you credit at higher rate, at higher risk. I mean higher rate interest rates, because they do have that leeway to approve those who have bad credit record. Uh, okay. Will I incur areas in any way if I make payment arrangement? If you make payment arrangements, remember they will. It's more like they will recalculate your terms, so your interest might change depending on the arrangement that you're making. For example, if you are taking a payment holiday, for example, your interest will still be calculated, although you're not gonna be making payment. So your interest will still be calculated, number one, and then your term as well. Let's say you are supposed to finish in 60 months. So if you are taking a payment of holiday for 3 months, you will finish your payments in 63 months. That's what's going to happen. Your term will increase, and then the interest will also be calculated in the period, for the period that you're not making payment as well. That doesn't mean that your interest is not calculated. Okay, Matsobane says, is making it clear here. He says a car can be repossessed by court and through the sheriff. Don't allow the police, the bank send a letter after 2 to 3 months or 3 months default to take your car, unless you are willing to voluntarily surrender the vehicle. Yes, that's true. Uh, let's read this one. Do payment arrangement with the bank in case you going to pay in later than the agreed dates. Does it work for you in terms of interest? Like I said, if there's a delay, remember when they calculate your interest, they calculate it from the 1st to the 31st. If you are going to pay maybe on the 7th, then they're going to calculate interest again from the 1st until the 7th. So you'll pay interest for the time that you are not paying. So it will definitely affect your interest. But it will not affect your credit record because you've made an arrangement with your bank. When buying a vehicle through a company, are there limitations of vehicle you may buy? 2. What type of vehicle may claim VAT if I am VAT registered? There are no limitations on what vehicle you can buy, but you can only claim VAT on a single cab buggy. A double buggy you cannot claim VAT because it is deemed as a motor car as defined in terms of the VAT Act. And then also remember, if you bought a vehicle, for example, using the company, but you are using the vehicle as well, so you will pay tax. I mean, 2.5% of the value of the car included on your taxable income. So you will pay. So it will be like your additional income. So you'll be taxed on that value of the car because you are using the vehicle. So it will be more like a benefit. So yeah, those are the effects of buying a car through the company and using it as well. But if you are using it strictly for business, then it's fine. And the business also will, number one, like I said, like the previous session, you would claim depreciation, irrespective of whether you are claiming a VAT or not. You still be able to claim a depreciation to reduce your taxable income in the business side. Is it true that you should not allow dealership to apply for vehicle finance? They say they opt for interest rate higher. Like I said, remember when you apply for yourself, maybe through the bank, you get a true rate. There's no markup. So the bank, but when you do it through the dealership, they add their own markup, so that they can compensate themselves for their service. So that's why you've had people saying that they opt for higher interest rate, because they've already added the markup on what the bank has offered you. So it's very, like I said, if you are not lazy, it's very advisable to do it yourself. In that way, you will save interest. Okay, let's do a quick recap. Let's do a quick recap. Okay. Vehicle finance, I said it's a specialized loan you get from either a bank, dealership, or finance company that allows you to pay off a new or pre-owned vehicle in monthly installment. So it doesn't necessarily have to be a new car that you can finance. Even a used car you can finance. And then another option is a lease, where you rent a vehicle. So when you lease a vehicle, you have the right to use it for an agreed number of months and kilometers. At the end of the lease, you may return the vehicle and pay at the end of the lease. So the difference here is, number one, you don't get to own the vehicle. At the end of the contract, you take a car back, and then you pay whatever penalties that you may incur. For example, if they said you can only use the vehicle for 20,000 kilometers, say maybe you've exceeded by 8,000 kilometers, they will charge you a rate, maybe 5 rand per kilometer on the 8,000 kilometers that you've exceeded. So that's how the lease works. So the balloon payment and residual payment. So the difference between residual and the balloon payment, like I said, contract relates to where the risk of the outstanding payment lies at the end of the finance agreement. So the residual payment relates to a lease, and then a balloon payment relates to a installment sale agreement, like your normal finance. So a balloon payment is an inflated installment that falls due at the end of the credit agreement. You remember, you pay the balloon payment at the end. That is why your installment works out cheaper, because when they work out your installment, they put that balloon payment aside. So they work out the installment on the remaining amount. So that's why it looks like it's cheaper. You are paying less, but at the end of the day, you will pay the balloon payment when the contract lapses. So the risk associated with the balloon payment is carried by the customer. So you are liable for the full balloon payment in the final month, which is the 60th month if it's 60 months of the contract, and this form part of the payment stream. Residual value, like I said, is associated with rental agreements. The residual value of an asset is the estimated amount that an asset's owner would earn by selling the asset at the end of the contract. So the residual value, for example, is let's say you're buying the vehicle for 100,000, and then you are renting a vehicle that costs 100,000. The owner can tell you that at the end of 4 years, he estimates that the value of the vehicle is 40,000. So they will make sure that they they protect that residual value by restricting you, so that you don't depreciate the value of the residual value. So that, for example, they will say in a year, like I said, you cannot travel more than 20,000 kilometers. That is for the protection of the residual value, because if you exceed the value, that residual value may change because of the kilometers traveled. So that's why they make sure that they protect it by restricting you in your traveling. So the risk associated with the residual value payment is carried by the financial institution. Okay, financial institution typically would therefore place certain restrictions on the mileage of the vehicle and may impose penalties. Like I said, if you exceed the kilometers, they charge you penalties. Okay, what is the risk? One of the possibility that that the balloon or residual payment can be higher than the market value of the vehicle at the end of the contract. So if you that's why it's important that even if when you take a balloon payment, don't take it as high as possible. For example, if you take it 45% of 100,000, it's 45,000. Maybe after 5 years, the vehicle is going to be worth 10,000, but you have to pay 45,000. So even if you don't have that residual value, you will not be able to trade in the vehicle because your balloon payment is going to be higher than what the dealer can offer you. So that's why it's very important that even if you're taking a balloon payment, don't take the higher one. Make it as low as possible so that you'll be able to finance it at the end of the contract. So the difference between residual value and balloon payment, like I said, relates to where the risk of the outstanding payment lies at the end of the agreement. With the residual value, the risk lies to the owner, and then with the balloon payment, with you, the buyer. Okay, we've dealt with this. Fixed rate loan, like I said, your interest rate doesn't change, irrespective of the current changes. It won't change, and your variable rate, it's linked to prime. So when they announce any changes of interest rate, your installment will also change. So yeah, we've dealt with the ways of financing that you can either finance through a bank or through a dealership. Like I said, the main difference that with the dealership financing is that the salesperson typically does all the work for you. So that is why they have a right to add a markup of whatever rate that you get, so that they can compensate themselves for doing the work for you. Financing a vehicle through the bank generally requires you to obtain a pre-approval. This is when you go to the website, do your own pre-approval, and then the bank will tell you, for example, you qualify for 200,000, then you can use that pre-approval to go and up to buy the vehicle that you want. I think we've mentioned those things. And then, like I said, before you go to your dealership, identify your transport needs. Don't buy a vehicle because you see a friend is buying a vehicle, or don't buy a vehicle because you've got a salary increase. Figure out your financial situation and budget. Like I said, you always have to work out your budget. Take all your income, less all your expenses, and then whatever is left, see if you can afford to buy a car or not. Take into account the insurance as well. Don't take out a car without insurance. Insurance is very, very important. I see a lot of people would buy a car and then later on cancel the insurance, and then when they have problems, then it's a huge loss that they cannot recover. Then obtain and read the copy of your credit report. Remember, I said you must read your credit report before you go to a dealership. That gives you time to correct whatever errors that are there on your report. Sometimes they may say you have not paid a certain account, whereas you have paid. So you need to clear that before you apply, because otherwise your application will be declined. And then, like I said, you need to check all your newspaper ads, publication and websites, and get the brochure of the vehicle that you are buying, and then maybe work out your fuel consumption and see how much it's going to cost you in terms of fuel and maintaining the car. And then also find out the cost of insurance from your insurer in advance, so that you can factor in that amount, and then revisit your budget and check if you can still afford to buy. Those are the things that you need to consider before you visit the dealership. And then when you're at the dealership, stay within your price range. Like I said, use your head, not your heart. Make sure that you stay to whatever you've decided, because if you use your heart, you'll end up taking a wrong car that will cost you a lot to pay. Try to negotiate both your purchase price and your finance terms. You can still negotiate, you can still ask for discounts from your dealership. So determine whether an offer meets your budget and transportation needs. and then understand the value and cost of any optional products or services offered to you, such as an extended service. Know the difference between on the extras that they give you, whether it's a service plan or maintenance plan. So you need to understand those fully before you sign a contract, before you take out those extras. And you find that a lot of people have taken extras that they're not even aware, and then they're not using them. So read the entire contract carefully and ask questions about the terms of the contract before you sign. If possible, get it beforehand. Get it a day before or 2 days before. Don't read it when you are there for collection, because your friend is waiting for you to take the car. You won't have time to read it through. Be sure you have a copy of your contract, of your credit contract or lease agreement, with all signatures and terms filled in before you leave. So make sure you get the copy. And then know that if you have financed the vehicle, ownership belongs to the bank until you have paid the contract in full. It's not your car yet until you have paid the last installment. That's when it becomes your car. And then make your payment on time. All right. Okay, I think I can call it a night. Okay, let's read this comment from Master Dumi. What advice would you give if you want to buy a van that you want to use in a courier company? Must it be new? If you can get it new, you buy it new, because remember, you're going to travel a lot with the vehicle. So if you're buying it at a higher mileage, it might cost you to maintain the car in terms of the service, because number one, it will be out of the motor plan, it will be out of the service plan. So I would advise, if you're going to use it for that purpose, because since it will be on the road most of the time, I would advise you to buy it new. Yeah, because if you, like I said, if you buy a used one, maybe it's almost at its aging, so it might give you problems maybe 2 months down the line. So it's best if you can buy it new and finance it new. Uh, okay, looks like there are no any other questions. Okay. All right. I think I can call it a night. Thank you so much for joining, and have a good night. Thank you.